warm welcome. I love you guys. Like they said, I am Evelyn Soto with Quest Trust IRA Company, and
You're gonna bend it down a little.
yes, there you go. Better?
Can somebody else help? Yeah, just try to put it back on again.
Let's see.
I want to make sure you guys can hear it.
I feel like, the Lord of the Rings elves.
You guys hear it in the back? I think we're good.
Okay, we're good. There we go. Oh, there goes my earring. It's okay. We'll do it without earring. So I want to thank you guys for being here and let you know that last year was my first ever event with Quest here at DealMakers, and I learned so much. And a year forward, they sent me with my boss, Quincy, I don't know if he's out here, and they have me teach, there's Quincy, and they have me teach the most difficult subject. So bear with me a little bit, but all of you have heard of Quest IRA. I see a lot of our clients here. So today, I'm going to talk to you about a brand new subject that Quest has never talked about before. Y'all ready? Me. But really, solo 401ks, and as you guys know, we have our disclaimer. We at Quest Trust do not provide tax, legal, or investment advice, nor do we endorse any products. Now that we got rid of the legalities, let's go forward. So who is Quest? Well, Quest is one of the largest self-directed IRA custodians in Texas, actually the largest in Texas. And we have over 20,000 investors, active investors. And why is that important? Because a lot of you who do real estate deals are looking for those people. We have over $3 billion in assets. And with a B. That's a lot of money. And we have about 400 million? So that's a lot. There's people out there. And we have over 100 employees, and all of us are highly trained and educated, not just in IRAs, but in our specialty of our department. So I'm an IRA specialist. I can talk your ear off about IRAs. We have private entities, real estate, and all of our people can help you or find you the right person. So let's talk about the solo 401k. What is a solo 401k? Well, a solo 401k is meant for those who are self-employed or who are just one or two employees, such as yourself or your spouse. And as always, we want to talk about entities. There are taxable entities and non-taxable entities. So what are taxable entities? Taxable entities are typically anything that you yourself set up, such as LLCs, C Corps, S Corps, and trusts. Now, non-taxable entities are self-directed IRAs, qualified retirement plans, and solo 401ks. Now, we get asked a lot, hey Evelyn, what's the difference between an IRA and a solo 401k? Or, my favorite question, which one is better? Well, guess what? It's not really one or the other. They are buddies meant to work together to give you the best outlook for your retirement plans. So let's discuss some of the advantages. We have advantage number one. You get to be your own trustee. So we get a lot of questions about checkbook control. Who has checkbook control? Awesome. So you know that if you're going to have checkbook control with your IRA, first you have to set up the LLC. And then you have to find a trusted manager for that LLC, set up a checking account, send money from the IRA to the checking account, and then finally, you have that trusted manager deploy your funds. Well, with a solo 401k, you are the trustee, so you immediately have that checkbook control. Advantage number two, you have the ability for those larger contributions. Now, I'm not going to go over this whole contribution limit because that's a lot of weeds, but let's just talk in broad strokes. As the employee, you can defer up to $23,000 for 2024, and as an employer, you can do 25% of your W-2 income or 20% of your net earnings as a self-employer. Now, combined for 2024, you can contribute up to $69,000. Now, of course, let's talk to your CPA because that number differs greatly on the information they share with you. Now, how do you fund a solo 401k? Well, there's 4 buckets. You have the profit sharing, which is the employer contribution, the traditional 401k, which is the employee contribution, and then you have the Roth contributions. Now, as a Roth, you can deduct your contributions, but remember that those will not be deducted from your annual gross income, but it is going to be tax-free forever because it has the same rules as a Roth. And lastly, rollover contributions. That means that you can bring in any other retirement account except for Roths into that account. And the best part is that if at any point you no longer qualify for that solo 401k, you can roll them back out. Advantage number 3, you can invest in almost anything as long as it's legal. You have your real estate, your private entities, traditional, promissory, and crypto. Now, advantage number 4 is my favorite, and it's the exemption from UDFI from debt leverage real estate. Does anybody know what the debt leverage real estate rule is? You have to own it for a year and 1 day. So how do you incur UBIT, or unrelated business income? Well, you get that by either owning a business or renting personal property. UDFI, on the other hand, is unrelated finance income, debt finance income. And you get that by debt finance real estate income or debt finance capital gains. And then, of course, a lot of syndications. We have a lot of syndicators in the room. You guys know that those are usually a big thing for UBIT and UDFI. Which brings us back to advantage number 4. One of the main benefits is that you can avoid UDFI. So, of course, just because there's all those benefits, that doesn't mean that there aren't any considerations or things that you want to look out for that might limit your solo. Consideration number 1 is legitimizing. Basically, what that means is that your company must have earned income on the year that you establish your solo 401k. Now, there are a lot of ways that you can create that income. Please see your CPA. And you cannot move Roth IRA money into a Roth 401k. And that is just because a Roth is an individual account and a Roth 401k is an employer-employee account. So those can't interact. Consideration number 4 is the reporting requirements. Everybody knows that when you have your IRA, we will help you get those forms, which you can then take your CPA. Well, when you are doing a solo, the buck stops with you. You're doing your own reporting. And last but not least, record keeping. Solo 401ks have always been really scary because you're kind of on your own. You have to have that beautiful mind with numbers that you can see and keep track and have Excel spreadsheets and talk to QuickBooks and all that thing to keep track of what goes to what bucket. And then, everybody say it with me, prohibited transactions. Prohibited transactions, when you have your IRA, you have that oversight of somebody going, you might want to look into that more closely because that could potentially do a prohibited transaction. Well, a solo 401k, again, is just you, and you have to use your best judgment so that you're not in trouble, and like Jeff said, that you're going to owe that 110% of what your total assets are. But there is a solution. So at Quest, we have spent the better part of the past few years not only researching, but investing millions of dollars, talking to real estate professionals, talking to people who have dealt with solo 401k nightmares, and figuring out what is the best way to kind of answer all these pain points. Now, with this revolutionary new platform that we are offering, you can do IRS reporting, document preparation, record keeping, electronic notifications, compliance. You can link your account to your solo 401k so that it can keep track of all your incoming and outgoing funds. You can do direct asset acquisition, security, calculators, and resources. That is a lot of things that this platform can do for you. That being said, it is not going to take the place of any tax, legal, or financial experts. You should always have those in your back pocket. Now, this is a list of all the extensive things that we can do for you with Quest. I'm not going to read them to you because it's really a lot of fine print, but if you want a copy of this, please come see me. I'm right out here, and I can share this with you. I can send you an email. And then, of course, I'm going to talk to you guys about the Quest Expo. Jim puts on this great event, and we are stealing some of his ideas. And we are actually going to have our expo this June. Has anybody bought a ticket yet? Well, you should. It's a lot of fun. We are going to have some great speakers. We are going to have breakout sessions with professionals in the industry who can talk to you about real estate, who can talk to you about finding capital, and a lot of other things. I believe Jeff is going to be one of our speakers, and Wendy Sweet, if she's out here, and John Heyer, who's a favorite around tax stuff. So please come join us. We are really excited. All the Questies will be there, and we will have as much fun with you as you can handle. And then if you guys have any questions, we do have this great QR code. That QR code will put you in touch with anyone in my team who will answer any more questions. I know this was a very broad presentation, but more than anything is to give you guys the basics of what a solo 401k is and what it can do for you. We are learning every day. Quincy is constantly teaching us new things, and we want to do the best services for you. And with that, does anybody have any questions? You see, this is why you can't go after Jeff Watson. Thank you guys so much. This was wonderful.